Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I'm going to do a fundamental analysis valuation on Tesla stock, okay? Ticker symbol TSLA. I think that everyone knows this stock, okay? Because a lot of people, they just love this stock. It's a hot stock, okay? So you asked me about that. You asked me, please do a valuation on Tesla, and okay, I'm gonna do it, okay? Before we start, I would like to tell you that this valuations is telling you how much should you pay today for Tesla stock, okay, based on real numbers. This is not speculation. This is not just telling things that electric is the future and all those kind of stuff. Tesla is gonna be at $6,000 in 3 years. Okay, all those things. No, this is an analysis based on real numbers, real data. Okay, and so, because I like to do those things, I don't like to talk about random stuff. I don't like to speculate about things that are not real. I like real numbers and real valuations. Okay, so leave me a like if you find this video interesting and subscribe to the channel. Alright guys, so before we start with the valuation, let's go to take a look at the last balance sheet, okay? To understand how Tesla is. Now, in the year 2019, we had total revenue of 24.5 billion. The cost of revenue around 20.5 billions, and that gives us a gross margin very low, okay, 16.56. Now, what's the real trouble of Tesla? It comes here, okay? Operating income just 80 million from 24.5 billion, and that gives us an operating margin of 0.33%, okay? Now, this is the real problem of Tesla. And what another big problem is that when it comes to net income, we go negative, okay? After 24.5 billion, we have a net income which is negative. So Tesla was actually losing money in 2019. And bear in mind, Tesla is not making any money so far, okay? And they are saying, well, we are trying to become profitable in 2020, okay? So right now, this is the situation. Revenues of 24.5 billions, net margin, net income negative, okay? So no money yet for Tesla. We can see from here, okay, revenues, they went up. When it comes to earnings, we are negative. So let's see if probably this 2020 is going to be better. I don't know, with this pandemic, okay? Anyway, they are trying to become profitable. And this is a problem because of all the expenses that they need to have to build their cars, okay? And that's why Tesla cars, they cost a lot. And now they were trying to lower the prices. The problem is that when you lower the prices, you put margins even more small, okay? Because you are making less money and the costs or productions are quite high for Tesla, okay? Now let's see how it's gonna go with all those gigafactories in China and things like that. Anyway, Tesla right now is not making money. Let's see the balance sheet, okay? So first quarter 2020. Current ratio 1.24, okay? That's pretty honest. It makes sense. Above 1, I like it. Total assets, total liabilities, we have a ratio of 1.37, so it's quite fine. A debt to equity ratio of 42.93%, okay? So below 50%, I would say. It's honest, okay? Not bad. Market capitalization right now is in the market 160.3 billion, and that gives us a book to value of almost 16, okay? Because the company's value in the balance sheet is just above 10 billion, okay? So that's it. And I'm gonna show you something. Now, this is the real trouble for Tesla, as I told you before. Gross margins, operating margins, and net margin. Now, you see that since 2010, those margins, they have been negative, especially for the most important one, which are the operating and the net margins. Okay, Tesla was not making money, and right now, since 2012, they are starting to go up again. Okay, but you know what, look at that, they are still negative. They are not able to put them in the profitable way, and we are, and now that's what they are trying to do now. Those numbers, they have to become positive, okay, especially the net one. Okay, so now I'm gonna do the valuation. I'm gonna say, well, those numbers here, they are gonna become positive, okay, so that we can do or discounted free cash flow valuation, okay, because we cannot do that if the company is not profitable. Okay, so as I showed you right now, they are going to zero, so we can say, well, they're going to become positive. Okay, and we had the first year actually with a positive free cash flow, okay, which has been 2019. This is from Tesla, okay, this is the official document from 2019, the last quarter we can see. And we have a net cash provided by operating activities in Q4 2019 of 1,425 and capital expenditure of 412 million. That gives us a free cash flow to equity of 1 billion, 1.013. Okay, now the problem with Tesla is that in Q1 they always lose money. Okay, so at the end of the day, let's see how much it is, this free cash flow from 2019, and let's try to predict the new one. Okay, now here, okay, Q1, Q2, Q3, Q4, that gives us a free cash flows for quarters and a total revenues 24.57 billion. Free cash flow in total is 1 billion. Free cash flow to equity is 4.39%. And this is just free cash flow to equity divided by the total amount of revenues. And this ratio here, it's important to have an idea on how much free cash flow to equity Tesla has given the revenues. Okay, great. Once we know that, this is an important margin, because now we are going to estimate the revenues, and by using a ratio, we are gonna find the free cash flows so that we can do the discounted free cash flows valuation. Okay, now let's start. Scenarios. So first scenarios, this is a normal scenario. Okay, a normal scenario, it is what is expected to do by Tesla right now. Okay, revenues, those are from analysts. So in 2020, the expected revenue for Tesla is 26.53 billion. In 2021, 37.24 billion. 2022, 48.7 billion. 2023, 54. 2024, 62 billion. Okay, in revenues. So this is the growth rate. Okay, as I told you, we take this ratio and we say, well, for 2020 is gonna be this. Okay, very near the same. Pandemic, all the stuff, the same, no improvements. And let's say they're gonna improve it to 4.80%, to 5.15, and 5.30. Okay, so those, you just multiply this by those percentage and you get the estimated free cash flows to equity for Tesla. Okay, now perfect. What we do, we copy them and we paste them here. And here is what we got. Now, the first requirement, The rate of return is 8.5. Now bear in mind, this is the rate of return of the equity, okay, because this is free cash flows to equity. In my opinion, this is not conservative. It should be at least 9, but you know what, 8.5, it's fine from Tesla. That's what I would like to get every year, okay? Great. And perpetual growth, 3.50%. Okay, so let's see what we have. Actually, when we copy and paste those cash flows, we have that the today's company's value is 56.17 billion divided by the total amount of shares outstanding, which are 185 million. We get a fair price of $303.66 per share, okay? Now, we don't need to deduct for anything because this is already done with the free cash flows to equity. So it's the equity value, okay, already. Great. Now, let's improve the perpetual growth rate to 4%. Now, bear in mind that usually the United States economy is making 2.5% every year, okay? So 4% is almost the double, okay? As a perpetual growth, it's quite high. Anyway, let's see what we get. Same free cash flows from the same scenario. The only thing that changes is the perpetual growth. And we get a today's company value of 61.66 billion. That gives us a fair price of $333.32 per share, okay? Now let's change this scenario and let's say, well, those margins, the growth is gonna continue to remain the same in revenues, while what they are gonna improve is the margins, okay, here. And before they were lower, okay, right now they say they're gonna get better. So as a 5 in 2021, 550 in 22, 23, we are 6, 24, 6.30, okay? Now, I showed you before the historical things with margins in Tesla, okay? And this, in my opinion, is pretty optimistic. But anyway, let's see what we get. Again, rate of return, still the same, perpetual growth, 3.50%, okay? We get that today's company value 66.1. Divided by the total amount of shares outstanding, we have a fair value, fair price of $357 per share, okay? Great. Now, same free cash flows. Let's increase again the perpetual growth rate to 4%. And we get a fair price for Tesla today of $392.60. Okay, great. Now, another scenario. This is the optimistic scenario. This is the growth scenario, which in my opinion is not going to happen. But we have to consider it, okay? Now, this scenario sees the revenues of Tesla growing at an incredible rate for the next 5 years, okay? Because now we have this problem with the pandemic, but they are gonna increase in this scenario 40.37% in 21, almost 31% in 22, 30% in 23, and almost 32% in 24, okay? So very high growth scenario. And those margins here, they are the same better margins of the previous scenario, okay? So in my opinion, this is the best case possible scenario, okay? This is the dream for Tesla. And bear in mind, in 2024, 83 billions in revenues, okay? It's huge. It's huge. It's like the 65% of Ford, okay, for Tesla in 4 years, in just 4 years, okay? It's incredible, okay? Anyway, let's see what we get. We get that when we copy those free cash flows to equity, we paste them here. The requirements is 8% discount rate, perpetual growth 4%, okay? We have a today's company value of $95.13 billion, sorry. Divided by the total amount of shares outstanding, we get a fair price of 514. Now, let's improve, let's increase the perpetual growth to 4.50%. This is super high, okay? Very high growth scenario. What we get is a fair price today of $573, okay? So with the best case possible, this is the fair price you get today. And this is a dream scenario, okay? So perfect. Now, as always, we do an average to trying to get a range, okay? So an average of this plus this, all those kind of 6 prices. And what do we get? We get this $412.39 per share today, okay, June 2020 for Tesla. We take a 25% safety margin. That gives us a $309.29 per share, okay? Meaning that the fair price of Tesla, for me, with this analysis, is inside this range, okay? We take an average of this range and we have an ideal fair price valuation for Tesla in June 2020 of $360.84 per share, okay? So that's a fair valuation for Tesla today. Now, of course, the stock is overvalued, okay? No doubt about that, okay? No doubts. Why it is so overvalued? Because actually people love this kind of stocks, okay? They think that the electric car vehicle, they're gonna be the future, and they are gonna be, okay? They are right. And they love Elon Musk, the CEO, and even with the SpaceX. Basically, is a brilliant man, okay? He's a genius, and he's always trying to do new stuff. So people have a lot of faith in this stock, okay? And the PE ratio is huge. It's out of the world because, well, it's pretty simple. Tesla was not making money and was trading super high, okay? So the PE ratio is huge. People are ready to pay a lot, even if Tesla is not making money at the moment, because they have faith, because they love the industry, because they like to speculate, okay? But when we look at the real numbers, Tesla is overvalued, okay? Tesla is overvalued. So would I buy Tesla today at $876? Absolutely no. Okay, absolutely no. Who is the winner here? The winner here is those people that they bought Tesla back in the days when this was the price, or even lower. Okay, who has been able to buy Tesla below $300? Has been the winner, okay, is the winner today. And even with the March crash, okay, so buying Tesla around $340, $360 was a very great investment, okay. Buying Tesla right now, well, I don't do it, okay. I don't do it. I think that there are other stocks that they deserve more. And this analysis is not telling you that Tesla is not going to be $2,000 per share in 5-7 years. This analysis is just telling you that today Tesla is just overvalued for the real numbers that they can achieve from their company, okay? Great. Now, I hope you find this video interesting, so please leave me a like and leave me a comment below. Tell me, what do you think about Tesla stock, okay? Do you own Tesla stock? Subscribe to the channel and have a wonderful day.